Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, June 29, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money you cannot afford to lose. And nobody loves your money more than you do, so it is our understanding that you should take responsibility for your account. And so with that in mind, let's take a look at the week that was. Looking at that week and economic announcements, through our economic calendar, we see that we had plenty of announcements, starting on Monday with new home sales and the Dallas Fed. Didn't affect the market all that much. The market on Monday took a bit of a beating, and as the week went on, we saw a rebound begin to take place. Consumer confidence certainly didn't hurt the market in any way, shape, or form. Durable goods orders came out on Wednesday, pending home sales. Again, these were not the things that were moving the market. The market was having a technical bounce. And then on Thursday morning, we saw GDP, which basically came in at about what we expected. Jobless claims at 8:30 before the market came in at about what was expected. But Thursday did not show the great strength that we had expected to see. And the big news in the market this week was the euro contagion, more discussion of Greece, of Italy, of Spain, and European Union's having meetings about how they're going to handle their problems, how they're going to handle their fiscal problems, how they're going to handle their monetary problems. And this is what's dominated the market. And we'll take a look and see what's left for the week, as we got Chicago PMI on Friday, and we got consumer sentiment on Friday morning also. So these are two things that certainly have been known to the market, but it wasn't the economic moves that moved the market this week. It was that news out of Europe. And so let's take a look and see what we ended up with as the week with the overall market. Looking at the SPX, we saw that we popped into an upcycle. Here's the last 4 days. Monday was a big down day in the market, didn't make it to the 200-day moving average, closed below the 30-day moving average. And then on Tuesday, we got that little technical bounce that we expected, but it was confirmed that we were in a new upcycle, as we had a higher high and a higher low on Wednesday. And then as we hit Thursday, we ended up with a lower high and a lower low as we ran up against that 1333 resistance point that we've talked about before. But the big news that caused all that came out of Europe. The market was down heavy in the day, and then what happened on Thursday is that we got news out of Europe that they canceled an announcement, which the market interpreted that this could have been good news coming out, as the market fought back and rallied into the close to give us that what looks like a reversal pattern with that hanging man. But we remember that reversal pattern in itself means nothing without a confirmation on Friday of a lower low. So we'll see exactly what's going to happen. Market had gone into an upcycle on Tuesday and Wednesday, and then Thursday we saw that indecision. So for the week, we've ended up so far basically right about where we started, with a very tight trading range from about 1330 till about 1310. So not showing a lot of movement in the market in the SPX, and so it has not really moved much of any place the first 4 days. And we'll see what happens as we go into Friday, and whether they're going to be interested in holding through the weekend, or whether it'll be a sell-off Friday going into the 3-day weekend, or the 2-day weekend. Here it is, looking at it in more detail. There's our big down day on Monday. Tuesday we got that little technical bounce, which one might expect after a big down day like that. But then on Wednesday we got that confirmation with higher highs and higher lows. And then that news from Europe kind of stopped that from taking place. So we ended up with that 20-point range that we were talking about. The big day is Friday. What's going to happen? Are we going to get a higher high, break up through that 1333, or are we going to get a lower low and head back towards that 200-day moving average, which is right around 1300? So we'll see what happens. Watch tomorrow's opening. See what happens in that first hour. It may give you some tip as to where the market's headed as we head into the weekend. Looking at the Dow, we see that it had very much the same type of formation, trading above the 200-day moving average and trading within a very tight range this week as we look at the 4 days this week. Basically ending on Thursday exactly where it started on Monday. Nice pattern for those of you that are taking time out of the market by utilizing options and being sellers of options in order to capture that time decay. Very good technique for those of you and the type of market that allows us to do that without really much fear in the market whatsoever. NASDAQ showed a little bit more movement, a little more volatility. That doesn't surprise us, trading below the 30-day moving average and the 50-day. And we see still above the 200-day, and again ended up with that hanging man on Thursday. Again, we'll probably follow the S&P as we look at Friday and see how the week is going to end. So far, we've gone much of nowhere. Looking at the Russell 2000, we saw a little more strength out of the Russell on Thursday, which may be a fortune teller for where the market's going and continuing in that upcycle. We'll see if that continues to be true or not. Again, we talked about how to decipher that as the day goes on. VIX ended up closing at 1971, closing below that magic 20 mark where the VIX spends most of its time throughout the year, on the high end of volatility in the normal range. And so we haven't really shown a great deal of fear in the market as we have all this news coming out of Europe. It may very well be somewhat priced into the market as we see the news coming and the market kind of vibrating with that news, not making a big decision one way or the other. Was there a big move to the bonds today as we saw fear in the market this week? We see that the bonds have kind of been going sideways, showing us much of nothing as the week has gone by. And in fact, nothing much as we've been in the month of June. Kind of traded sideways the entire month. Next, we'll take a look at the XLF, which is the financial spider, the exchange traded fund for the financials. And we see that it followed very much the overall market. And if we look at Thursday here, we see that it did show a great deal of strength going into the close, as there is some anticipation of good news coming out of Europe and its banking system. USO, as we look at oil and the ETF for oil, we see that USO again showed weakness on Thursday, giving us a lower low and a lower high, and actually breaking below this little bit of support we had here. As this is the time of the year many would expect oil to be headed up, as we're headed into the vacation time. Doesn't seem to be following that pattern whatsoever this year. Looking at gold at safe haven, we see that it also pulled back today or Thursday, as we see that it actually ended up with a lower high and a lower low. So those are the different sectors that are also complementary to what takes place in the SPX and our different indices that take place. So we've kind of seen what happened with the week, and looking at the spider, Thursday we saw we had a bit of a higher volume day as there was all this infighting going on, and had as that news came out of Europe that they were canceling that meeting, and there was some happiness in that announcement, expecting good news because of that cancellation, and also some better news out of Germany as far as its austerity package. We see that there was a good deal of volume as the fight took place, but we did close with a white candlestick on the SPY as it rallied into the close, closing very near to the high of the day. So for those of you that are gold members, stick around. In just a minute. We'll go into our stocks to watch with our other charts that we watch very carefully through the week. For the rest of you, thank you for being here. And tune in again. Remember that we have this on both Monday morning and Friday morning, looking at the market as it will be and looking at the market as it's been. And so with that, this is Butch Shorak, Options University, Friday, June 29th, 2012. Trade well, and thank you.